I think on the stability point, I think there's a flaw they'd like to protect. OPEC are looking at something like 55 to 60. That's what they're solving for through managing their budgets. And recognizing shale, recognizing volatility as ways of capping the upside. I think you're absolutely right. They don't want to drive prices higher. They want to stick within a range. That range is likely to be somewhere between $60 and $70 a barrel.
You've been doing a lot of work on Saudi Arabia, and one thing is the energy ministry, which targets stability. The other thing is the broader government, which targets getting the economy turned around. Saudi Inc. you've mentioned in your copy as well. So there's a disparity, the market believes, between the realised price of oil for Saudi crude and indeed what they need to budget balance the books, so to speak, as well. How far away are they from the two?
Yeah, it's a very good point. They've managed to take their fiscal break-evens down from $100 down to somewhere between $70 and $80. Our scenario analysis looking forward shows you, Steve, that when you think about everything they're spending on, yes, you have break-evens elevated near term, but that non-oil revenue they generate 3 to 5 years from now is going to take break-evens lower. It's like an oil major building a downstream business. Literally, they are building a downstream business, but also metaphorically, they're building non-oil revenues that will help take that equilibrium break even lower. And why that's important is because it then paves the way for them to be able to produce more oil without having to worry about that negative impact on, as you say, the budget.
Taking it back to the broader picture as well, I noticed the Russians, and to be honest, it's something that I've been saying ever since I saw, it was in JMMC back in, I think it was September, October, with the Saudis and the Russians. And I thought there was a line being there where the Russians were saying, well, we'll have to wait and see, whereas the Saudis were saying, no, we need to start kind of taking action. And that was borne out by the fact the Russians haven't taken their output down as much as many hoped.
No, I think there's bilateral trade agreements between Russia and Saudi. Look at what the Saudis are doing investing in.
I'm not saying they're not close, because I think they are. I think they're closer than they've ever been. But I'm just saying the Russians don't appear to be holding their end of the bargain at the moment.
I think they've taken production down, but you're absolutely right. There are relationships between them around business, to do with LNG, to do with trade. And I think that's essentially what's driving that mutuality. But in effect, OPEC has a lot more to lose if they don't take production down than Russia. Russia's break-even somewhere around $40. The average break-even, fiscal break-even, I mean, for OPEC is somewhere between $60 and $70. So you're absolutely right in terms of the desperate need to take production down. It looks more like it sits with OPEC than it does with Russia.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.